Hello, speaking Forex. This is Gregory. It's currently 1:45 a.m. Pacific Standard Time, and it is August 13th, and this is my analysis for the week. So on my screen, I have a chart of the British pound Canadian dollar. This is a daily chart. Currently, at this blue line, we're at a support area. If you zoom out, you can see why. Starting with this double bottom formation here, some people call this a W pattern. The top of the neckline, you can see that resistance was very, very significant. So for many days, price touched the resistance area and then failed. Did it numerous times. Eventually, price broke through, and as you can see, the market retested that area once again before it took off. So the market came, so that was like July of last year. The market came back, and a couple of months later, retested it again. We had a double railroad formation here, and the market took off once again. So now fast forward to March of this year, we had a tweezer bottom. So this area around 155 is very significant. So here we are again. It is August 13th. That's today's date. And on Friday, on the 10th, we tested the area once again, and we had a nice rejection. Now this time, previously we had different formations. We had the railroads here, we had the double tweezers there. Right now this is what you call a piercing reversal. It's when the low is taken out and then the bar reverses and closes above the 50% area of the previous bar. So we have the red bar down, the black bar up, and it closes beyond the 50%. So this is very significant, and it also closes in the top half of the bar, of the current bar. So this is a really good situation for us. If you go to the hour chart, you'll see that if you watch my price wave model video, we're obviously making lower lows and lower highs. We hit the bottom here, made a double bottom, and this high was taken out. So it's a very significant move there. So once that high is taken out, we have a nice pullback. And the best thing about it is that price actually went back to the resistance area that was broken. So now this is a really good buying opportunity for us. Low risk. So what are my targets? Well, if you go back to the daily, what you'll see is that we had previous support that's been holding pretty well until it was broken earlier this month. So price broke through, and as you can see, intraday we tested that previous support that turned into resistance twice. And so the area held significantly well before price came down to test a new support. If you go down to the 4-hour chart, you can see it. You can see it better actually. We have support, 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 resistance, resistance. Market fell to the bottom, reverse, and now it's making its way back to the upside. So I surmise that this area is going to be very significant, and it should get tested. So let's talk about our risk. Right now, price is at 55.30. So if you place your stop beneath the low of here, maybe find like a pivot that's beneath there for this day, you're looking at about a 60 pip risk, maybe it's somewhat less. And our target, if let's say theoretically we got in at 55.30, our target at 56.80ish, that's 150 pip profit. So risking 60 to make 150, that's about 2.5 to 1 reward to risk ratio. So it definitely meets our parameters for our money management, and this qualifies as a plus EV trade setup. So we have a lot of things in our favor. We just play the odds here. Play the probabilities, and nothing work 100% of the time, but we play the odds. You always want to make sure that you're risking less than what you're trying to make, and that way you don't have to be right that often and be profitable in the long run. So that's my analysis of the British pound. Thanks for tuning in. This is Gregory, and I'll see you guys next time. Take care.